Hello, everyone. This is Robert and Sharon Porter from Trucking in Business, and we are back on today with special guests. We've actually had them on individually, but we have the pleasure today of actually having both of them on today. And we're going to be, we'll let them go into the topic of what we're going to be doing today. So we have Mike Montgomery, known as Unicorn Mike. That's in the life insurance, medical insurance.
Yeah, medical insurance. Okay.
Michael, Mike is in the medical insurance industry, and then we have David Watkins that's in the life insurance industry. Thank you for clearing that up, Robert.
You are totally welcome.
So without further ado, Mike, why don't you reintroduce yourself, and then David, introduce yourself, and then we could go right into this topic today.
Okay, perfect. Hi, I'm Health Unicorn Mike, the guy with the unicorn on his head. I'm a nationally licensed, award-winning health insurance broker. I offer affordable health coverage that creates tax deductions for small businesses. I've actually helped thousands of entrepreneurs and their families. I'm licensed in 33 different states. I've been in the industry for 9 years. I have access to 95% of the plans that are available. So yeah, that's me. Happy to be here, part of this conversation. There you go.
All right, my name is David Watkins III. I am a licensed life insurance agent, licensed with several companies, broker, so we can write policies in several states. It doesn't matter what state you live in. We can write a policy in that state for you. And we can write any plan, term life insurance. We can write IULs. We can write whole life policies. I specialize in helping people to get out of all of their debt in 9 years or less, usually without them spending any more money than they are already spending. And so when you contact me and we sit down for a consultation, we're able to walk you through a comprehensive financial plan using life insurance products to eliminate debt and build wealth for you and your family. So glad to be here. Appreciate the Porters, as always, for the opportunity. We've been trying to get this together for quite some time, so I'm glad it finally came together. And so glad to be here.
Definitely, yeah. It's been a work in progress, so to say. So yeah, definitely. So Robert, I don't know if you wanted to add anything before we get started.
No, not at all. Let's just jump right into this thing, So I'm always about learning. So guys, I will put it in your hands. So
all right. All right. Well, I'll let you go first in regards to the life side, or do it that way. Go ahead.
Okay. So one of the things that I'm very passionate about is people understanding the benefits of life insurance, but particularly life insurance that builds cash value and creates wealth for you. And that kind of specific life insurance is called mutual dividend paying whole life insurance. I want to specify that this mutual whole life insurance is different from traditional whole life insurance because in many cases, traditional whole life insurance takes years to build cash value. But when you deal with mutual dividend paying whole life insurance policies, you're able to build cash value much faster. And then you're able to take the cash value that you build in these life insurance policies and use them to eliminate debt, to store up money for retirement, and essentially whatever you need that life insurance policy to do. And since we're having this conversation about how life insurance and health insurance kind of work hand in hand, one of the things that we see with these mutual whole life policies is that they afford what is called living benefits. And by that, what we mean is that usually in when you exchange money for a life insurance product, the only thing that traditional life insurance vehicles will give you is a death benefit, which is essentially what are we going to pay to your family or your loved one or whoever when you expire. But with these particular life insurance vehicles, they have what we often refer to as living benefits to the policy, which means that in the event of a chronic illness or a severe illness or even a illness that would mean the eventual your eventual death, you are able to access the death benefit in advance, and your death benefit will now turn into a living benefit. And so if you're diagnosed with cancer or some other chronic illness or even terminal illness, you can now take the death benefit that would have been paid to somebody else and allow that death benefit to be a living benefit to you now, so that you can essentially offset the expense of the chronic illness that you have. Now, make no mistake about it, this is not health insurance in the least bit. This is simply what you would use to offset the cost, either for medical expenses or living expenses in the event that you suffer the loss of an income, or in the event that you need some assistance paying for medical care or whatever the case may be. There are no restrictions to what you can use this money for whenever you have a chronic, terminal, or some other illness. You simply send them notice from your physician. Once you send them notice of this chronic or terminal illness, they then will advance you a certain amount based off of whatever year you are into your policy. It is an advance on your death benefit. This is also not the cash value that you also have in your policy. This is completely different from the cash value. So one of the benefits of these kind of life insurance policies is that you have the cash value of the policy that you can access should you build any up. And then you also have the ability to take an advance on the death benefit in the event of a chronic or a terminal illness. So these policies are amazing policies to have, just in case, right? They're almost like disability riders to some degree, except for they're a whole lot less red tape. And I guess a comparison would be you don't have to wait the 6 months or whatever it would be for you to claim that money. Whenever you get notice of having a chronic or a terminal illness, you will be able to access your death benefit almost immediately. You can take the max of it, or you can take as much as you think you need, and all of that money will be tax-free. I certainly can say more, but I'll stop there and let the health unicorn come in and take over. But awesome thing to have when it comes to life insurance.
David, those are some great points there. I love that. That's typically known as a critical illness rider in the industry. I love that's associated with the whole life aspect of things. I used to, when I worked as a financial advisor, whole life was definitely something that I preached and talked about, conversationally. So I love your diatribe there. It's fantastic. He's definitely an expert in this space, you guys. I definitely trust what he has to say there. Now, the other issue though, comes into, let's say that you get yourself a whole life policy, right? And let's say that this death benefit is $1 million, right? Nothing too crazy, just $1 million, right? Well, this is why you need health insurance as well with the life insurance, because you can have, for example, a triple bypass surgery. A triple bypass surgery on average is $750,000, right? That's without any complications. That's without them doing any further treatment. That's without you, having to go to rehab. That's physical therapy, et cetera, right? That's just the surgery itself, right? What most people don't tell you in regards to the health insurance aspect of things is that most insurance plans kick you off at about $1 million, right? So if you have this $750,000 surgery, right, and then you do the rehab and the, the additional things, you're going to hit that $1 million. Well, if you took that cash value, right, that you're talking about, not the cash value, but the benefit, that critical illness, right, more than likely it's going to cap at that $1 million. So it's going to cover that one thing. But the question is, what happens next? Because now you're dealing with rehab. Now you have propensity to have another heart attack. Now you may have comorbids like diabetes. Now you may have things like high blood pressure. Now you may have to get constant treatment, right? Now you may have to get constantly seen by the doctor. You just had a major cardiovascular surgery. You're going to bare minimum be seen quarterly, right? Then you also may have other blockages, which could elicit for another attack. Well, guess what? That money is gone on that whole life policy. That was fantastic. You have the cash value still. You have your death benefit still. But without the health insurance, you've minimized your asset. Whereas if you have the health insurance along with this policy that David is talking about, in conjunction with, you've now strengthened and doubled down on your asset, right? And we want to say that because 69% of all bankruptcy in the United States of America is due to medical debt. That was pre-COVID. That's oftentimes because people have the wrong plan. They're using their coverage incorrectly, right? Or maybe they've done something, as I just mentioned, like only have the life insurance and not have the health insurance. They have to work in conjunction with each other. They need one another. They're friends. They hang out all the time, okay? You're going to be trying to get your diagnostic testing, right? You're not going to use life insurance for that. You're going to use your health insurance for that, right? You need to get your lab work. You're going to need your health insurance for that. You need to see your doctor's health insurance for that. You're going to need your emergency room visit, right? Let's say that it's an emergency, but it's not considered something fatal, right? Something that would be fatal, like non-lethal, right? Let's say that it's not a cancer, heart attack, or stroke, but let's say that it's a bout with gout, right? And this bout with gout has you hurt, and you're in the hospital for 2 months with gout. But let's say that it's COVID, because COVID isn't written in most plans right now, right? Because this was something new to us. Let's say that it's COVID, and you have this whole life policy, it's a fantastic plan. And you're like, you know what? I'm gonna take my $1 million out to cover my COVID expense. Well, guess what? Fantastic, you did that, that was amazing. After COVID though, are you still alive? Yes. Now what? Right? So that's where you need the health insurance to tie in so that way they're complementary. They're not against each other. They're not antagonistic in any capacity. They literally are meant to complement each other. Think of them as boxing gloves, right? You want to go to fight for yourself. You want to go to fight for your health. You go to fight for your assets. You're going to have boxing gloves on, right? You're going to be in that ring, be squaring up. Well, your right glove, that's going to be that life insurance. It's critical to you. The living benefits are fantastic. Something that you absolutely need. The death benefits, unmatched. The tax deductions, all right? Not the tax deductions, the tax-free, right? It's not dealing with a tax bomb. All amazing, amazing things. But they won't help you to see the doctor that you want to see. They won't help you to get that dialysis that you're needing. They're not going to help you to cover that cost of bankruptcy, which 69% of people get into that bankruptcy. They're not covering your bankruptcy. No. They're covering the asset. Protect the asset. Get those boxing gloves. Get that right hand covered in life insurance. Get that left hand covered in health insurance. Work together so that way you can keep and protect your asset as long as you can. That's what I have.
Great analogy. Great analogy with what you said. Let me interject something, and then Robert or Sharon, you can jump in if you want to. But one of the things that I'm seeing with the life insurance side of this now, especially with COVID, is between the time that we write a policy on a client and get them through underwriting and all of that. First of all, the life insurance company is going to require a medical record, right? They're gonna petition your doctor or whatever. They want your medical records. But then from the time that we write this policy to the time that the policy is approved and issued, one of the things that many companies are now requiring is that I have my clients sign a statement of good health, is what it's called. And the statement of good health basically will say, between the time that you did this application and the time that the application was approved and issued, have you had COVID-19, or have you had, any major medical issues or whatever the case may be? They're going to know. They're going to want to know that. They're also going to want to know if you have health insurance, and have you been to the doctor? And if you've been to the doctor, have you been following what the doctor, recommended that you do? And if there's anything in your chart that the doctor says that you should have done because this issue came up, and they don't have a record of that, that life insurance company is going to, depending on the severity of the issue, deny you coverage, or they're going to give you a different table rating, which means that you're paying more money for a product that you could have gotten significantly cheaper because you didn't do what you were supposed to do, or whatever the case is. And so when the health unicorn says that these are boxing gloves on two different hands, that's literally true, because they work in conjunction, they work in cohesion with one another. There is no discrepancy at all between the two of them when it comes to your health. In any facet, they're going to want to know what the deal is. And I often do, when I do Clubhouse and workshops, I often talk about how do you get through underwriting, because understanding the health concerns, the health component of this business is 90% of you getting through underwriting. It is a great deal. And so I don't mean to ramble, but I need to make the connection that these are not necessarily two different things, although they're, different in business. These are really right there with each other, and you got to understand how they work in conjunction with one another. Okay, I'm done rambling.
I had a quick, go ahead, Sharon.
No, go ahead, Mike, go ahead.
I was just going to clarify underwriting just for a moment. The thing is that different companies have different underwriting. So this is why you need to talk to somebody that knows what they're doing. Somebody that's been in the industry for a while. Maybe they're an agent, maybe they're a broker, right? Maybe they have an IMO. These are all insurance phrases. What it means is they have access to things that you don't have access to, right? So if this agent, who's reputable, who has respect, who's done it for years, who's won awards possibly, right, says, hey, this is my recommendation because of this. And then you go and you say, you know what, I'm gonna do my research. Feel free, do your research. And you find, let's say you find 500 terrible reviews. Like, this is terrible. Guess what? The agent already knew that there were 500 terrible reviews. This is what the agent didn't tell you. The company has 15 million clients. Do you know, random nugget for the room, the only company that matters from an insurance perspective in regards to their opinion for an insurance company is AM Best. If it's not AM Best, it doesn't matter. Somebody could say, 1,000 people could say, this is terrible. What did AM Best say? AM Best said they're excellent. Well, then that company is excellent, because AM Best is the oldest credit rating company in the entire world. On top of that, they're the only company that's reputable enough to rate the insurance companies. So if an agent who's respectable and has knowledge and years in the industry, right, tells you that, hey, you should go this route, it's because maybe they're aware of the underwriting. Because again, different underwriting is different for different people. I'll give you an example. I used to write over 65 coverage, right? I wrote over 65 coverage for about 5 years. I won Agent of the Year writing over 65 coverage. I probably have 2,000 clients over 65. I've written with 13, maybe, let's say 20 different companies over that span. All different underwriting for each one. I'll give you an example. Mutual of Omaha, just a random company to mention off the top of the head. Great company, fantastic company, A++ rated company. So I already know we're dealing with the creme de la creme of companies. This is the rule that they have in regards to their Medicare supplements. People, you don't speak this language, so this may get specific, but it's for the knowledge of the room. So they have what's known as a 2-2-2 rule, which means that you can't have more than 2 conditions that have 2 medications that you're taken for, and they have to be stable more than 2 years. Guess what? Aetna, also an A-rated company, doesn't have that rule. So me as an agent, I know that if you are taking more than 2 medications for 2 conditions with less than 2 years of experience, that I can't get you Mutual of Omaha. But guess what? I may be able to get you Aetna. This is another random point in the room. the names of companies are irrelevant. Stop shopping based upon the names of companies. It doesn't mean anything. You know what matters? The network, specifically with health insurance. If you're able to get yourself a PPO, which means you can see any doctor, it travels with you nationwide, right? It gives you a higher percentage. We've talked about this in the room. It gives you a higher percentage in regards to network benefits, right? If you're able to get a PPO, regardless, let's say it was with Bobby and Susie's company, right? You see United Health there, you see Blue Cross Blue Shield, it's with Bobby and Susie's company. And Bobby and Susie have a PPO. And they send you everything in writing. Guess what? Bobby and Susie have to honor that contract. So your experience may be entirely different than my experience with Bobby and Susie's company. Because you said, hey, I didn't get a PPO. I got this PFFS plan. I got this HMO plan. I got this EPO plan. Or better yet, I got a plan that I didn't qualify for that he just talked about. He just talked about comorbids, is what David was talking about, right? Where you have something and then something happens after you get the policy, right? And there's like an extended waiting period. And that waiting period is to determine whether or not you have eligibility to get coverage, right? That's what he was just talking about, right? Guess what? It's the same thing in health insurance. If I write you a policy, right? And you say, hey, I don't have anything, these things going on. And then guess what? They check your MIB, which is known as your Medical Information Bureau. It's kind of like your credit history for your health, for your life insurance. Every company, every single company, doesn't matter. Random nugget for the room. Every company is looking at that. Doesn't matter if you apply for Blue Cross Blue Shield. Doesn't matter if you apply for Aetna. Doesn't matter if you apply for Cigna. Doesn't matter if you applied for Bobby and Susie's company. If they're a quality company, they're going to ask those questions on the front end when it comes to a health insurance perspective and a life insurance perspective. What you don't want an insurance company to do is ask you those questions on the back end, because what that means is that they're going to find a reason to deny your claims. I don't mean to get on a rant. I just had some lady that tried to act like I didn't know what I was talking about. I said, ma'am, I sent you all of your alternative options. This is what's unprecedented in health insurance. It's different from life insurance, right? A health insurance agent, this is how you know you're supposed to, that you're talking to the right one. They'll send you the plan that they recommend. They'll send you all the alternative options so you can know the comparisons. And they'll send you explanations of benefits to show you how that plan worked that they recommended. The Porters have actually had a consult with me where they can attest that I did exactly that. Hilarious concept. Maybe I'm a quality agent. Who knows, right? But what I do know is that if that person hasn't done those things, then you're not able to make an informed decision. On the life insurance side, there's no need to do that because all the life insurance plans are working differently because they all have what's known as a rider. Riders are things that you put on the insurance that adds premium to the insurance, but works in your favor to help you with the insurance. What he was describing before was a critical illness rider. There's also accelerated death benefit riders that he's talking about, right? There's different aspects within different types of insurance with different companies that changes. And those riders can be different or have different value propositions per company. So for example, if you go with Penn Mutual, you may see an entirely different benefits package, right? Set up with them than you would under Mass Mutual, or under Mutual of Omaha, or under Northwestern Mutual. Random point of fact, if you can, typically speaking, when it comes to insurance, mutual funds, et cetera, you may want to look into a mutual company. But not all mutual companies are built the same. You don't have to be with a mutual company. You can be with an open company. It just depends on where you're comfortable at, right? But that's why you need to talk to somebody that knows what they're talking about. Somebody like David that is giving you expertise in regards to life insurance. Somebody like myself, Health Unicorn Mike, that knows what they're talking about health insurance. Don't allow other people's experience to determine your opportunity, because the research that you're doing is going to be inadequate compared to the research that the agent had to do in order to uphold his fiduciary responsibility, which means I have to do it the right thing by my client as best I know. Otherwise, I lose my license. That's literally what that means. We are held to such a high ethical standard. We have to do CEs. We have to do NIPR. We have to get our license renewed. We have to pay for our own state. There's a lot of aspects that go into it. So when somebody says, you don't know what you're talking about, or better yet, I have to do my research, it makes us agents and us brokers and us people that are been in the industry for a while chuckle, because the idea that you could do more research than I've done as an expert in the space and specifically as a broker is hilarious. Either way, I pass it to you, David. That was just my random mode, my part. I just, I had to let y'all know. Go ahead, Porter.
Yeah, well, let me interject a little bit here. because y'all have dropped down some awesome nuggets.
Mhm.
Now, see, one of the things that we don't realize is that as people, we don't know everything. We have to remain teachable. And this is why we in this space that we in right now, is because with our industry that we're dealing with, the trucking industry that we're dealing with, we forget about the key factor, which is the person that's behind that wheel. Forget that they have a life, that they need to be healthy, they need to do that. So if you don't have tools to help support that, you can't do your job. You can't secure your family. If you don't have the right life insurance, you can't secure your family if something happened to you. Or you can't, in other words, what we're talking about and discussing today, we need both of, it's like a double punch. We need both of these two entities to help secure the driver or the individual, the truck driver or the company owner or the business owner. We need these two in order to secure them so they can secure what they do for a living. So you guys, listening to you, I know one of the things that I learned a long time ago, that you can't teach common sense. Some people just don't have common sense. You can't teach it. So regardless if you take a bat, knock it upside the head, or whatever the case may be, but I realize you have to realize there's a level of knowledge that you don't know. This is why you have people who master their skills. So when people such as yourself, David, and you, Mike, as well, see, y'all mastered your skills.
Mhm.
Y'all understand the nuts and bolts of what goes on behind the scenes that we can't see. So in order for you to see behind it, you need someone that's already been behind it to tell you what's going on. And this is one of the reasons why we're having this discussion today. And gentlemen, I'm telling you right now, you are blessing me to be on measure, because I never looked at the combination of the two. I never understood that when my health insurance, when my health insurance pay up a certain amount of my benefits or whatever, I still can go to my life insurance to help cover some of the expenses if it's a chronic illness. I said, no one ever told me that. I never knew that until just today, So it makes me feel good that I have certain things in place, but it also makes me realize too that I got to tighten some things up as well. So, I realized in talking to you guys that, you need to get your health together, because everything is based on how you're taking care of yourself, even from the medical side and from the life insurance side. So now, one of the things I want to ask both of y'all is this. When you say you are dealing with a chronic illness, and how do on both sides the insurance companies deal with that? If you are dealing with a chronic illness and you need life insurance, or you need health insurance, or if you have a medical issue, let's say diabetes or high blood pressure or whatever the case may be, how do your companies deal with that? And what does the companies look for in order to what you call underwrite you or write you, a policy? So whoever want to go first, go ahead and go.
I'll go first, and I'll pass it to David subsequently. It's going to be different per company, right? So different underwriting is going to be different per company. That's why I gave you the example of that 2-2-2 rule. Some commonalities would be if you're getting active treatment, right? Are you actively getting something done right now, right? Do you have any pending surgery? A doctor said, hey, you need to get this surgery within this time frame, right? Give you a definitive time frame. That's something that's going to have to be done before you can get insurance. Now, mind you, there are such things known as guaranteed issue policies, right? So guaranteed issue policy means that there's no medical questions involved. Now, as I wish you had my brother Troy up here as well. Hopefully you can get him to come next time as well. But he always talks about there's 3 things you can determine with the insurance company. You get to pick 2, and they pick one, right? So if you say, hey, I want a really low price, right, and I want it to last for 30 years, then they're going to make you climb up a mountain to get that benefit, right? But if you say, hey, I want, you got to kind of figure out which one you want. So you can pick one of those that you control. Well, what you control from a health insurance perspective is leveraging you being in good health to get preferred rates on your health insurance. Go ahead. You have a question?
But the question is that, so you're saying if I have a health challenge, in order for me to get a policy or whatever, certain things will require for me to jump to hoops in order for me to get that policy? I mean, I'm trying to make sure I understand.
So let me put it in perspective from a health insurance perspective. If you have conditions going on that are pending treatments, diagnostic testing, surgery, something is pending, right? Or something that you're actively doing right now. If you had a major condition, let's say in the past 10 years, you've had cancer, you've had a heart attack, you've had a stroke, it's been diagnosed as on your MIB, it's showing up there specifically. Then what the insurance company is going to say is you can't qualify to get yourself a preferred rate on your health coverage. Then you can control things. They're not going to give you a lower rate on the insurance because you are a higher risk to them. So if you are a higher risk, you are going to pay more money. Now, where you can still get insurance, because it's going to disqualify you from some plans just based upon what you have going on, right? So what is going to happen instead is you're going to have what's known as a guaranteed issue policy. Guaranteed issue means that there's aren't going to be any medical questions involved. So what that also means is that if you don't have any, hey, I didn't answer any medical questions, right? Fantastic. Then anything new that comes up, we will cover. But if it's related to something that you didn't tell us, then we may only cover a percentage because it's going to be a conditional option that they have because you're dealing with the risk factors that are involved, right? So it's going to be great coverage. It's going to work for you. You're going to get discounts and PPO coverage and whatever, right? But let's say hypothetically that you had a heart attack in 2015, 16, 5 years ago, 7 years ago, whatever it's going to be, right? And you didn't tell the agent this, and the agent writes you a policy. And then you have an additional heart attack that, let's say 3 months later, the insurance company is going to go back and look at the fact that you had that heart attack that you didn't disclose to determine whether or not how much of a percentage they're going to be able to pay on your bill. But if you've had the insurance itself, let's say you buy this insurance, right? And you have the insurance for a year. Then after that year, they're not going to do that look back period because you would have already filed the claims under the insurance for them to be able to deny any insurability.
Okay.
That's probably way too specific as well.
Because now, as you're saying that, Mike, David, how does that hook into what Mike just said as far as, if you have somebody and they have you on a special medical plan, how does that hook in? How can you get insurance, life insurance, that help you along that path? I guess I'm making myself clear.
Sure.
I mean, you understand what I'm saying? The question.
It's pretty similar in the life insurance side, and so if you have a chronic illness and you are seeking life insurance, there are some policies that you may not be able to have access to. And then there are other policies that you may have access to, but it's going to cost you more. And so, of course, we have the same guaranteed issue policies as well, no medical. Usually those are going to be term policies, and they're going to cost you a lot more the older you get and the more serious your medical condition is. So from my experience, most of these high cash value and building policies that, I usually deal with, the older you get and the more serious your medical conditions are, means that the more you're going to spend in paying for those policies. And you may not have certain riders available. So for example, the advanced death benefit rider, that usually comes standard and free for most qualifying people in these policies. However, if you are rated on another table rating is what they call it, so a B rating or a C rating or whatever the case may be, then what they will start to do is they will start to take away some of the benefits of these riders that they would normally offer to somebody free of charge. And of course, that's pretty standard, but across the board, but it varies from company to company. So, for example, I often say the best time to get these kind of policies is when you're healthy and when it's cheap, so that you can get it early, get a good rate, lock it in, so that if you develop a chronic illness or, some other issue after you already have it, because you've already signed the contract and they've already agreed, then they will give you these advanced death benefit riders and things of the nature after the fact. And so this is not a one size fits all. Like, I've got clients with high blood pressure or diabetes or something like that, and they've gotten, these policies and they've gotten them with the advanced death benefit rider. But all of this is going to be circumstantial to what does your medical history and information look like. So when people ask me underwriting questions about, hey, I got high blood pressure, or hey, I got diabetes, can I get this? My answer always is, I don't know, and what I mean by that is the fact that you have it doesn't necessarily exclude you from getting approved, but how you manage your personal medical situation may or may not exclude you. And so I'm not trying to be flighty with the information, but, it's just kind of how insurance companies work. So the best time to get these health insurance, particularly for the advanced death benefit, chronic or terminal illness, and all of those kind of things, is when you don't have these conditions. So, for example, a chronic illness might be defined, depending on the insurance company, might be defined like heart disease, lung conditions, strokes, things of that nature, colorectal cancer. These might be chronic illnesses. And then a terminal illness would be anything that a doctor might project will end in death, relatively soon. And so the insurance company has a list of illnesses of which they define these things, and they will allow you to access your death benefit early if you are diagnosed with one of these issues, presuming that you are already in a contract with them in which they agreed to cover these things for you. Good luck trying to get these advanced death benefit riders and chronic and terminal illness riders and stuff like that if you already have it and you are seeking insurance. You are less likely to be promised these things by the insurance company when you have that. And so that's how the insurance company, from a life insurance perspective, generally views these conversations. So if you are healthy, and let me say this, I'm like Mike now, I'm ranting again, but let me say this, for business owners who say, I hear what you're saying, David, I hear what you're saying, Mike, but I can't afford that, right? I can't afford that. I can't afford that. Well, here's the truth. You can't afford not to do it. Because if you are a business owner, if you're in trucking or whatever business you're in, and you are the business, if you're working, if you're driving the trucks, if you're doing this, if you're doing that, you're doing your own bookkeeping, if you are the business and you ever get to a point where you cannot make income, then one of the things that you need to do at this point is you've lost income if you got terminally sick or critically sick, so that you can't provide for yourself and your family. And then you have no way to take care of yourself, no way to replace that income, so on and so forth. So you can't afford not to do this. Right. And not to mention the fact that there is a tax deduction for your business if you are able to to pay for this policy through the business, insure yourself or other employees, you can write that expense off as well. Not only can you write that expense off, but with these high cash value life insurance policies that stores income, that money is shielded from paying taxes on it ever, right? Because you're simply borrowing against the cash value in the policy, and it's illegal for the government to tax a loan. And so you are shielding your income, you are shielding your retirement, you are shielding the expense that you pay to provide this product for essentially yourself and for your employees and things of that nature. So the benefits are just innumerable for the business owner to make the sacrifice and pay whatever the expense is to make sure you're either having health insurance or you're having this life insurance vehicle that doubles or triples as a savings account, as a death benefit for your family, as a non-taxable vehicle that guarantees you growth every year. I mean, I could go on and on about the benefits of these kind of things. And so, for people who say, I can't afford it, I often say you can't afford not to do it. It's just, you got to do it. It's a must. All right, let me hush.
No, you good, David. You good. I just want to interject there. See, this is why having professionals to help guide you through certain things is just very important. I'm making this, just as a note to these drivers. See, when we neglect to educate ourselves, we can't make the right decisions. So you're going to have to get someone that can help you to determine how to make the right decisions.
That knows what
they're doing. And see, and I tell you, Mike and David, I see their hearts, and they see this is they my kind of people. They're the people that I love to be able to that I look to help me to move in the direction that I need to move in. And so knowing that, I'm going to turn it back. Well, saying that, I'm going to turn it back over to you.
Well, I have a
Mike.
question as well too, and I guess you could answer this, I guess, once you say what you're going to say, Mike. But can you guys give an example of how someone, perhaps past clients or whatever, how you can have these two work together hand in hand, as you put it, Mike, two gloves on a hand. So is there an example that you guys could give where you can have these two work together?
Yeah. So it's always an and thing and not an or thing with health and life insurance, right? So for example, you need to get a checkup, right? You need to go say, hey, I'm coughing a little bit, I'll get a checkup. You're not going to use your life insurance for that. You're going to use your health insurance, right? Hopefully you'll go to an urgent care facility because it'll cost you less money, right? And then you go there and they say, hey, you're a little sicker than we thought, right? We have to do some testing. Hopefully you'll go to a place like Simon Lab or Quest Diagnostic, a standalone facility that's not attached to the hospital, so you can, again, pay less money, right? And hopefully, again, you have a PPO option so you can see the doctors you wanted to see, because maybe you wanted to get a second opinion. Well, if you had an HMO option, right? Again, none of this is life insurance. If you had an HMO option, you may be limited there. You may have to get a referral, prior authorization. Somebody may have to give you permission to go see the doctor that you want to see, okay? Versus if you have this PPO, now you can see whoever you wanted to see. And because you got a health-based plan, ideally, right? This is now a new condition, so they're definitely going to cover it because they've already done the underwriting on the front end. You want to be with a company that asks you medical questions on the front end. Because if they ask you on the back end, they're going to deny your claim. 85% of claims get denied if they ask you questions on the back end. This is with health and with life insurance. So they go hand in hand here, right? So let's say you went to the doctor, right? You had to get that checkup, that physical. It escalated. They said you needed some diagnostic testing, right? The testing comes back and the testing says, oh, you have a condition. Now we have to hospitalize you. You're in the hospital. It's not been diagnosed as a chronic health condition or a critical illness yet, right? You're still in the hospital. Well, guess what? That's still going to your health insurance, right? This is what you're paying your money for, right? Then you say, hey, doc, I still don't feel good. This is the episode of House all of a sudden. I still don't feel good, right? It's escalated a bit quickly. Now doctor says, oh my goodness, you have diabetes. Well, diabetes, although it's a chronic condition, isn't going to be a critical illness benefit, right? So it's not going to get you your accelerated death benefit. But not only does he find diabetes, now he's found heart disease. 2 days later, you have a heart attack. That heart attack is what triggers the life insurance kicking in for you to get the accelerated death benefit. David, tell me if I'm incorrect there.
No, you are right on target. You are right on target. I have nothing to add, Mike. You're right on target. Keep going.